It's the weekend, so I'm going to be doing some catch up on some other charts that I don't look at during the week. So that includes SPX, Bitcoin futures, gold futures, and also AMC. I have a lot of new followers, so I want to show some of the books I use. The first is Elliott Wave Principle, as authored by Frost and Precher. This is what Bulkowski points to as the authoritative source for Elliott Wave analysis. And then I also use Bulkowski's chart patterns, and this is a great book that I bought. He has a lot of books. I have them laying around here somewhere, but mostly I refer to the patternsite.com, which is his website where he actually blogs himself. So that's pretty much the life of this trading vlog, is applying this analysis and seeing how relevant it is, and then testing it with day trading. And so far, it's been really successful. So let's hop into the charts and do some analysis. Starting with AMC. I know this is generally the stock that people follow me for, so let's just start here and have a look. This is a 1 hour chart, and I made this chart about a week, 2 weeks ago. I was following this pennant that you can see here in yellow, and the price did reach the target pretty much on the nose. The target was 14.20, and the high we had at this candle was 14.25, so it came within a nickel of the target and then reversed. This is pretty typical. This is my experience with Bulkowski targets. You find a good pattern, you put a price target down, and then depending on the breakout and the move, it's going to reach that price target most of the time. The price did continue to fall, and we actually found ourselves failing to reach the top of this green uptrend. There's an upward channel through here showing these green lines. And I was expecting this rally to run to 18, and it did not. Instead, it failed, and then we formed this downtrend. The price did continue down and found itself finding support below the channel. So I'm thinking this is some sort of an accumulation zone. And the price did actually form a three-wave breakout, and I show that in these purple lines. So this kind of corrective phase, this does set an uptrend after that downtrend, and you can see the price did pass up through the downtrend but then rejected and fell back down, and it then touched the trend line before bouncing again and is now failing to reach back up into the channel despite this amazing close we had on Friday. I think now what I'm seeing is actually just another pennant, so I'm going to go ahead and label it. Here's another pennant. So these patterns are pretty small. They do have a higher chance of breaking out to the upside than downside. The percentage of an upward breakout is 57%, and the chance of a downward breakout is 43%. So it is generally bullish, but it doesn't have to be that way at all. You can see that as the price is struggling to get above that channel, we have enough touch points, 1, 2, 3, 4, and 5, to give us that pattern. And now we're looking for either an upward breakout or a downward breakout next week. And I think it actually might break up and out. And that would give us a move probably up to about $14. And that would be a great way to start the week. I don't expect, though, much upside after that. It just depends on how long the corrective rally lasts in the broader markets, in the S&P 500 and the NASDAQ. So what I want to get to here is actually to blow up into the 15 minutes. Here we go. And zoom in. I like to identify broadening patterns within price trends because they typically mark a trend reversal soon. And so what we have now is the bottom yellow line here is showing a descending broadening wedge. So we have our first, second, third, fourth touch points, and then this weird drop, and the price rises to form the last touch point that we need along this trend line to say, hey, we do have this broadening descending wedge. And the price did make a breakout at the end of the day on Friday. Kaboom! So this is a bullish breakout. Now on this pattern, the price target's just the top. So that'd be like 13.25, and it wouldn't be a stretch to push up another dollar into the low 14s or high $13 range. So that's kind of what I'm expecting for AMC, and that's going to start a little uptrend. And it's likely that the price will then grind sideways for a while. I'm going to go ahead and open up a different chart just so I can get a better idea of what's going on. I think that push higher is probably also going to define another corrective pattern, and it's hard to say where to start it. I'm just going to start with the gap, go up here, and say, hey, maybe we have one of these guys, another descending broadening wedge. I mean, when the price moves sideways like this and grinds up and down, up and down, up and down, it gets really hard to read. It's just wild and unpredictable, and I believe that we're watching a clash of different Elliott waves all at the same time, and it's just chaotic. So if the price were to form this pattern, the top would be, similarly up towards the 14s. There's going to be some significant resistance at 13 and 1350, And so we might see some consolidation through here before a push higher. I do have Bulkowski's website, thepinesight.com, pulled up above me. You can see that there's some simple ABC correction identification guidelines. And I'm going to be looking for upward corrective moves in the next couple of weeks because we have seen some big downtrends lately, right? So that's what I'm looking at on AMC, and this fits pretty well into the broader picture of the markets. So I want to hop off and get AMC and go to SPX. I have some awesome analysis on SPX. I'm going to turn on the 1 hour here. And I'm currently following a megaphone pattern, which is a broadening top. And this differs from the descending broadening wedge because it does not include the all-time high. When I charted the bigger waves, the cycle waves, I found that wave 5 was probably overthrown at the price, then dropped back down. And so I started this pattern after the A, B, and C correction from that overthrow of the motive wave upward channel. And this is what I have. And so I believe that, let's see here, these are primary waves. I always have to look. That's why I keep these books here. I have them marked. You see, you got to mark your waves, the degrees of each wave correctly, or it doesn't make any sense. The whole idea behind fractaling is that these waves are like kaleidoscopes. So I have in parentheses a Roman 2, and that's an intermediate. That's right. These are intermediate and minor waves. So you can see that these A, B, and C's, these are corrective waves. And for example, here's A, B, C. These are minor waves that compose intermediate wave 2. You got that? And then this push higher, this is the primary wave, a corrective primary wave B. So that's how these things fractal together. I have a hard time explaining it, but I can certainly show it. And that's what I got. This is my understanding, is that we had a 5-wave motive wave lead us down to the end of that corrective phase. And now we've seen a push up for corrective wave 4, and now we're forming wave 5. And wave 5 typically tends to be the biggest wave. And so now we have found a bottom at a short-term bottom just beyond the bottom of this megaphone pattern, and the price is pulling up. So if this is a wave 5, it's possible that it's over. It is possible that it's over, but it's more likely that the 5th wave is extending. I am looking for more downside. If we don't get this downside, that is perfectly fine. I do think, though, that we are in a corrective pattern that's going to last like a decade. So buckle up. It's going to get hard to read the charts for a while. Now, if this is the bottom and the rally does begin and the price pushes all the way back up near to all-time highs, that would be impressive. I would also be a little worried if that were to occur because we are at the end of a 5th cycle wave. And so if we do end up getting a truncated 5th, that would be a definitive top. So I'm not exactly sure at what point I'm actually bullish. Like over the long term, I am going to be generally bearish for a very long time. Though for the short term, I do think we are going to see some more upside action up to about 4,000 here, maybe to 4,050, possibly even to the top of wave 4 here. But I don't think that would be likely. If this is a 5th wave extension and this is that first push down, this intermediate wave cannot be retraced 100% by the corrective bounce that follows. So that's why I'm thinking we're going to get to 4,000 to 4,075 and then return and start down lower. And that third leg down, that's going to be the big one that's most likely to extend. So we have an intermediate wave 5, right? Yes. And it is minor wave 1, 2, and then we might go one degree smaller than minor. I feel like I missed major somewhere in there. At any rate, this thing could continue down much lower at a very fast pace very soon. I think this mostly depends on what the GDP data is for quarter 2 of 2022. Whether or not it's positive or negative is a huge deal. If it is just mildly positive, I think the markets will take it as good news, but it might lead to that intermediate high that I'm looking for. So looking for the top of wave 2 to show up and then follow the markets down lower. So I'm looking for, in short term, market rally to continue. And that's important because I'm going to go over to gold futures now, and it's good to have that context. I'm currently following a falling wedge, a true falling wedge. There's a lot of YouTubers, a lot of people spreading information around about chart pattern analysis and ID, and they call everything a wedge, but there's a difference between a wedge, a triangle, and a pennant. These are different things, and if you go into Elliott wave analysis, they're just different kinds of triangles, right? So it's really important that you use an ID, a pattern ID, and stick with the methodology. So Bulkowski, he ran tests, statistical studies on patterns based on parameters such as time, right, the length, and the height, and to do that, what he did was use an algorithm and a computer. So he's got decades of data, thousands of patterns, so much history, so much analysis. And when he's using that analysis to make forecasts of what may happen in the future, he has to make sure that the current conditions match the tested parameters. So it's about making variables constant, and then that makes the data reliable. So it's really important to use a chart pattern ID that matches your analysis method. So here I'm following a falling wedge, and Bulkowski's patterns are actually based in Elliott wave principles. And so you can actually see that I have these primary waves marked with their sub-intermediate waves also. And we are currently also, look at that, just finishing up a primary wave 4, looking for a primary wave 5 heading down, and I'm thinking to myself, if I am looking for a short-term bottom in the markets with a small rally before more downside, and that gold will probably reverse around that at same time, I'm looking for a truncated 5 wave. And to get that truncated 5 wave, you actually have to have a 5 wave motive wave form in that 5th wave, and then that wave cannot terminate beyond the end of wave 3. So the end of wave 3 is down here towards, actually I'm marked right there, 1785. And currently I think we have wave 1 and 2, and we're starting wave 3 of that truncated 5th, and it'd be very convenient for that 3rd wave to end at the bottom trend line of this falling wedge, to then bounce. And this is the thing, wave 4 really shouldn't be overlapping wave 1 all that much. If it does, it just reverses. So that would mean a very, very shallow bounce. So push down, shallow bounce, shallow fall. And that would give us a nice double bottom probably. We're probably going to get a nice double bottom here, I think, before we see a reversal and an upward breakout of gold. And that will happen as the markets in general are rallying and then declining, and gold will probably start to go up. Now if you did watch one of my other videos, you'll know that I'm watching for a positive correlation between SPX and gold. And so if the markets actually do bounce and then recover and start higher, I still expect gold to do well. I think that gold can rally with the stock market, and that happens in the corrective rallies of these motive waves, these big waves. And so I'm not going to go over the SPX chart on the yearly time frame. You can go back and watch my other videos. The videos do not lose value with time. They do not lose value with time. If you want to go back and watch, they all still have great replayability, and I make them for that reason, so that they can be referenced in the future in order to make corrections or understand and give more context to what's currently happening. So that was gold futures. Let's go have a look at Bitcoin too. So I've been following Bitcoin in this descending broadening wedge. Again, this is a corrective pattern, and there are some gaps to fill to the upside, and we do have a partial decline now within this pattern. That is to say that the price did not reach as low as it should have, which I was thinking would be around 15,000. And now here's the thing. That was an expectation, not a target, and it's important to understand the difference. An expectation is going to give context to the price in the future. So when you do have the price falling, it doesn't fall as far as you think. Well, now you're looking for some sort of reversal pattern, and this could be it. This is possible. But we also could just be forming a descending scallop, and the price will break down and then find more downside. So in the event that the markets rally for a little while and then Q2 GDP comes out poorer and the markets reverse at that time, that would fit this corrective pattern that Bitcoin has been in for a long time. And this would simply be wave A, this would be phase B, and then we're looking for C at that corrective downtrend. And the further we go into the future, the lower the trend line goes, right? So it just depends how fast and how far Bitcoin is willing to fall before it finds the bottom. It doesn't have to. So far I have this marked as a partial decline. It is possible that SPX, gold, and Bitcoin all rally simultaneously. And when I've been talking about this great experience of everything just going up all of a sudden, right? Like that can happen. We're not nearly there yet, I caution. But it's almost like everything will rally. I'm going to call it the everything rally if this does happen, because everything will rally together, and then the next downturn, the next reversal, that's really going to mark where the pain starts, because again, I still believe that the S&P 500 index can drop as low as 1500, and that might even be a natural part of the process where we have a lot of progression to do in society and in the markets and in business and in the world globally, and to do that, we're probably going to lose a lot of big money. Think about big oil. Petroleum engines are going to be obsolete. So what's that mean for the auto industry? What's that mean for, crude oil production? Consider those things. Big changes mean big moves in the stock market. So that's what I have for Bitcoin, gold futures, AMC, SPX. I want to look at TNX really too before I sign off for the day. This thing is going much higher. It's just been on an absolute tear. And I was thinking, what could do this? And I was thinking maybe, well, if bond rates go up and that causes the premiums to drop in bonds, then and rates are expected to be rising generally now for a long time, then perhaps there's a ton of short selling happening in the 10-year Treasury. And Powell did mention that there is some liquidity issues in the Treasury market still. Did you catch that? Go back and watch his testimony to the House Financial Services Committee this last week, and he did say that there is some liquidity issues here still. So I'm currently following a primary wave 3 higher. That's nuts. Let's zoom in a little bit here. This one's hard to read on an intraday chart because it just gaps so much. So we do have 1, 2, and then we went 1, 2, 3, 4, 5. Let's zoom in. Follow this. Where's 5? Or are we looking for 5? We're looking for 5. And so did we get 5 is the question. Yes, I'm looking for 5 up here. And it's possible that we did get it. It's very hard to tell. I do see a broadening pattern through here. Now, I didn't actually do any analysis on the 10-year Treasury yield here. So this is kind of just impromptu. But it is possible that we are getting a wave 4 and it is corrective. And it just has this weird shape to it where this trend line is the bottom. And then we have this like right angled and broadening formation for 4. Whoops. And then 5 would be higher. So I bet you the 10-year is probably going to come down a little more, form this megaphone, and then continue its push higher. And we'll have this nice megaphone pattern to mark 4. There you go. That's my analysis moving into next week. I am looking for short-term upside, looking for that reversal to set that intermediate high. If that doesn't occur and we actually do get a rally, I'm expecting everything to rally, and that would be a fantastic experience, as I've said. Again, I just want to give context and set some expectations. I think next week I'm going to be trading calls in AMC mostly, and that's what I have for this weekend's video. Stay tuned this week for daily updates. Subscribe, like, do whatever you want. I don't really care, I guess. I am just vlogging, but I would love to do this for a living. If you like the content, please feel free to support me. Join the Discord too. It's not just any Discord. I am active in the community. I moderate it, and it's not a free-for-all. Every once in a while, the lounge is open for everyone to chat, and sometimes it's not, and I recently just turned it off. So if you have a role, you can chat. If you don't have a role, you can't chat. Me and my mods, we're the only ones that can assign roles. So that's how I'm growing the community. It's going to be a messy thing, but that's okay. All right, happy trading.